Hi, this is Zach Meir from Master Investor with a look at some bulletin board hero stocks on Wednesday, the 6th of May. Starting off with Chariot Oil and Gas, we can see that there's been a recent recovery here. Basically, the big plus point here is the way that the stock has broken neckline resistance around the 9.35 level. That was set at the beginning of March, same sort of zone there in last month as well. And while we're above that, really looking for ongoing recovery. Initial resistance, 200-day moving average to 10.96 pence. And the top of this rising trend channel from December, 12 pence, maybe a bit more than that, maybe up to 13 over the next month or so, while this neckline resistance around the 9 pence plus area remains in place. Next up is Ferrum Crescent, stock which has been around in terms of possible recovery for a while. Situation here, we've got this gap through the 200-day moving average, that's at 0.65 pence. So now we have the possibility of going longer the shares on any dips towards the 0.65 level, just below 0.6, probably the stop loss, the 10-day moving average, 0.55 pence, so that sort of ties in there. And looking for a target maybe towards 1 pence again, which would be the top of this rising trend channel from October. Obviously, this is not a very liquid situation, but the real highlight is the way that we've gapped through the 200-day line. That should stand the stock in good stead over the next few weeks and months. Kalimantan is the next on the list here. Kalimantan gold, extended base here, obviously looks like a sort of flat line from a distance, but encouraging signs here. These dips, these RSI dips below 50 and then back up again are encouraging, and the overall trajectory is probably to assume that there's going to be progress within a rising trend channel from December. Target towards, let's say, 2.5 pence. Any dips towards the 200-day moving average, 1.37 pence, are regarded as a buying opportunity. The stop loss on the whole recovery argument probably best as the 50-day moving average there at 1.24 pence, shown in blue. Red Emperor is another situation which is looking encouraging. This is, well, really the encouragement started here at the beginning of March with this gap through the 200-day moving average. That's always a significant event. Technically, basically since then we've sort of filled the gap and then extended and consolidated the move. And now the next new move that we've seen yesterday. Possibility here as a best case scenario that we're heading towards, let's say, 5 pence over the next 2 to 4 weeks. Rising trend channel that sort of fits in with what I've drawn here from August, and the 200-day moving average is effectively the support towards 2.25 pence. Something to watch out for would be whether the shares can hold above this this resistance here from the beginning of March, where we had a 3.19 pence peak. Above that, as long as you hold above that on an end-of-day close basis, you'd expect a pretty direct move towards the 5 pence implied target. Back with Sefton, stock which I called up to 0.4 pence. It sort of missed the target by, I think, a fraction of a penny. Well, we're now back towards basically bouncing off the 20-day moving average at 0.24 pence. That sort of ties in with the old January resistance, 0.25 pence, and ideally we don't see any end-of-day close or weekly close back below that zone. If we can remain above that for, let's say, the next few days or on a weekly close basis, then one would look for another retest or a retest of the 0.4 pence area, and that would hopefully set the shares up for a fresh highs later in the spring or early summer. Remember that we do have this golden cross buy signal from the middle of last month between the 50-day and 200-day moving averages, and that should be supportive as well. Finishing off with a stock which has been bubbling under for quite a while but not quite able to take off, and that's Vast Resources. Not much charting data here, but still the same sort of view that dips towards the 50-day average, 0.68 pence, regarded as a buying opportunity. That's the floor of this rising January price channel, and we're looking for a return to 0.9 pence to 1 pence over the next few weeks. Possibly the best scenario, the best interpretation of this this chart would be that we've got a rising trend channel with the resistance line heading towards 1.2 pence, but obviously we can bring that into play fully once we actually clear this rather troublesome 0.8 to 0.9 pence resistance, which has been in place for over a couple of months now. That's it from me. More updates at Zach's Traders Cafe on Twitter.